Doug, the retirement guy here. Got a good question. Should I have YMAX in my retirement fund for income purposes? YMAX, if you haven't seen it yet, it's advertising some great returns, uh, large number of returns. So let's take a look at it today. First, what is YMAX and who are they and where they come from? YMAX is part of the YieldMax group of ETFs. They're universal fund option trading income ETFs. And YMAX was created as the fund of funds. So they've taken YieldMax, uh, multiple different ETF funds, put them all under one big blanket, using it as a money generating program, and really just working together selling options uh, to generate the income. Distribution rate 44.48%, great numbers there, and the 30-day SEC yield of 78%. Um, the numbers is what really makes people say, wow, let's check out YieldMax. What's inside YMAX is all the YieldMax ETFs that they currently have. Now, this is a picture of some of them that are part of the YMAX package. And if you look, they do a JP Morgan options income strategy. If you look at the bottom, they're doing an Amazon options income strategy. They're doing PayPal, they're doing Bitcoin. So they got a lot of the major stuff out there thrown into one big package. So their hands are and fingers are all in all different markets, generating. The goal is to create income. So why YMAX? Where did this come about, and really what makes it make everyone question it? Well, as I said earlier, YMAX advertises the returns of 44%, 78% 30-day SEC yields. So when you look at something with a 44% return, it's a total return over a specific period of time. And that normally includes both your income, which is your dividends and interest, and capital gains. But when you see something with a rate of 44%, usually the high rate like that always uh, puts out there significant risk. And no question about it, YMAX has a very, very high risk of performance. So you got to really watch out for that. And when you're talking about retirement and when you're talking about investing your nest egg in retirement, risk is a killer. You have to watch out for that at all times. The 78% 30-day SEC yield, and a couple other videos we've talked about this, is when you see a high number like this, it means it's a money generating income item. And you always love to see the big numbers like that. But when you do this, there's always the marking, and it clearly states here is when you see 78% in the SEC yield, that normally means it's a strategy that they're using options writing or leveraging income generation portfolio. And if you've been involved in this in any way, shape, or form, options trading, there's a lot of hands involved into it, all trying to make a dollar here and there, and again, has a lot of risk. Let's go some positive things. YMAX offers weekly dividend payouts. As a retirement investor, I love weekly dividend payouts. I put down here, you get your money sooner. Well, let's take a look at what makes weekly so great. Fast access to your earnings. Every week you're getting a check, you're getting a payment from the dividends. It keeps you more liquidity, keeps the money flowing in. And you can do so much more with that money as of reinvest it if you want. Put it back in, buy more stocks to create more income and create that snowball. Or have a regular cash flow like the old fashioned get a paycheck every Friday. Now you're getting a paycheck from your stocks every Friday for a regular cash flow so you can meet your budgets or your financial goals. Let's take a look at the return that YMAX posts publicly. As of 12/31 of 2024, the past month, they're down 2.49%. Over 3 months, it's up 10%, and over 6 months, it's 10.17%. So now the question is, why don't they have a year-to-date, 1 year, 3 year, 5 year? Because since inception, this fund is less than a year old. They've shown a 25.7% return over the period that they've been since inception. Another big asterisk that should be out there is they did not start weekly payouts until September. And that was the game changer. That's when YMAX became so popular everywhere, when they said we're going to weekly payouts. So what we did here is we sat down and said, what if? What if we took $10,000 and put it into YMAX when they started paying the weekly dividends? What would that do to our investments? So we put it into our program and said $10,000 invested on September 18th of 2024. The stock price at that time was $17.67. So we were able to buy about 565 to 566 shares. And then we looked at, over this period of time, dividends range anywhere from 12 cents all the way up to 31 cents a share. So what would happen 4.5 months out, all the way up to January 8th of 2025, the stock itself has dropped almost 90 cents. And if you look at that whole range, it dropped, came back, and now dropped again. But overall, we've lost $531 or 5.32%. So that's a little bit of a burn of our initial $10,000 investment. Income side, we generated $1,918 worth of weekly dividends. So if you would never have touched this for 4.5 months, your account would say it's worth $11,386, or a 13.87% gain over those 4.5 months. But what you've had to do is you had to take that $530 of loss from your dividends. So realistically, you're only making $1,300. So your burn rate to your income affects your return. One other thing I did too is found out the average income was $112 a week, which is about 1%, 1.12%. a week, which is not bad. So let's take a look at the summary. The stock return rate of negative 5.32%. It failed to return anything close to the 44% that they reported. And the burn rate, if it stays like it's doing, and it shows that pattern, it gets down to 16, it goes back up to 18, it comes back down to 17, you could, over 12 months, have a burn rate of over 14%. So with the burn rate of that for a retirement investment portfolio, we have to put that as a definitely thumbs down. The dividend return over those first 4.5 months is 19.18%. That is, to me, very, very strong. The regular cash flow, as I said, $112 a week, $451 a month, which is about a 4.5% per month return on your money. That's not bad. If it stays the same, your year-end return could be as high as 58% return on your initial investment in dividends. Asterisk. Don't forget, you have that burn rate you have to deal with. So that 58 could easily be only 25%. It could be down to 20%. It's all about how much of that burn is going to happen. So we have to give this one a thumbs up because of the great return that you get from it. The total stock return over those 4.5 months, as I said, is 13.87%, which includes your dividends. Overall, not a bad looking number. But if you're trying to do this for income, you have to pay a lot of your income back into it to stay in the game. So we give it a thumbs up. It's really an even point, but we give it a thumbs up anyways. So the question is YMAX good for my retirement account? So my answer has to be a positive no. Even though we said we gave it 2 thumbs up, I still have to say no. And here's why. Your net asset value, or your NAV, the burn is too high for a retirement account. Losing 5% over only 4.5 months is not a strong report, because you want to have, in retirement, you always want to have your dividend stocks flat or growing. You never really want to have it losing, because overall your asset value is what holds you together, because you're going to take those dividends and you're going to spend those on your weekly bills. So the regular cash flow, as it looks good of a yearly 58% basis, is great. I would love to have a stock that has 58% return on my money. But when you start taking out again money out of that to reinvest back into the stocks, I really question how much of that 58 you're actually going to be able to keep. Is it going to be more of a 25%? Is it going to be a 20%? Even those numbers sound great, but there's a lot of scary parts of having this in a retirement account. And my next one is going to be time. We feel this stock needs more time to filter out its ups and its downs. Give us a track history of what you're going to do before we make any big investments. That's why I note this one, say we're going to look back at this one in about 6 months to see any changes. Regroup and say, man, the burn rate is really only a smaller number than what we think it will be. Or maybe there's no burn rate. And then we'll also get 6 more months of dividends. How's the dividends going? Are they going up? Are they going down? So at this point, we say YMAX, unfortunately, is a no in your retirement account. Tell me what you think. Add a comment down below. Tell us what you think, your feelings onto it. If you like the information we're giving you, give us a thumbs up. And most of all, if you want, hit that subscribe button. Get all of our videos. We appreciate your time. We thank you, and we'll see you next time.